We've talked about so many business concepts, starting from setting organizational goals to organizational structure to business plans and pitch decks. And in the last module, we talked about raising funds. And now that you are ready to raise funds, you are definitely a big business. And you know what they say? The bigger the head, the bigger the headache. What we're about to talk about today is something that, if not handled properly, has sent many CEOs to jail. And what is that? Tax matters. Welcome to PEERFEST Module 9. This module talks about taxes in the Nigerian context only. So we're going to be talking about taxes applicable to businesses operating and running in Nigeria. The government has enacted a lot of laws which had basically aimed at lessening the tax burden for new businesses. However, a time comes when everybody will still pay taxes. And in as much as the government has given a lot of tax waivers, there are still some taxes which are not waived and which you must know about in order to avoid troubles in your business. I want to assume that your business is registered with the CAC. If you have not done that, please ensure to do it. You can't claim to be pursuing a growth strategy without having a registered business. So from that assumption, we can go ahead to state that when you get your CAC certificate, it's now common practice to have a TIN, that's the tax identification number, printed on one end of the certificate. That is to tell you that there is a synergy between the system used at the CAC and that's used at the FIRS. However, a common mistake that many business owners make is to assume that the fact that they have a TIN means that they are already tax compliant and are ready to start paying taxes. But that is a mistake that can earn you a lot in penalties. Because apart from having your TIN generated, you then need to go ahead to ensure that your business actually has document and physical records done at the Federal Inland Revenue Service. What we are saying is that after your lawyer has processed your CAC registration and it comes with a TIN, what you are meant to do is to take that CAC certificate and other documents that the business has up to that point, take it to the nearest tax office and open a file. Basically, you will be registering for VAT. VAT is value added tax. And after registering for VAT, you will be given a profile on the software used by FIRS called Tax Pro Max. They will give you a login, username, and password. What that enables you to do is that you'll be able to file taxes on a monthly basis. Even though the government has made a lot of tax waivers available to new businesses, you still have to file. Whether your taxes are actually zero, you still have to file. The penalty for not filing many times exceeds what you are meant to have paid as taxes. I'll go into those details shortly. When your business is tax compliant, you will be able to derive some benefits, including getting dollars at official rates, including being able to import what your business needs in terms of equipment and raw materials if your business is import dependent. Without a tax clearance certificate, you won't be able to have these processes done through official channels. And we all know that going through official channels is definitely safer and more formal than going through back channels or black markets. Remember, you are a big business now, you have to do things the right way. So many times what is standing in between you doing things properly is that tax clearance certificate. So being tax compliant will ensure that you derive these benefits and you are able to adopt formal procedures in your business. Like I mentioned earlier, the taxes we're going to be talking about are within the Nigerian context. So I'm going to be reading through a short list of federal taxes applicable to businesses in Nigeria. Firstly, we have the corporate income tax, which applies to businesses generating turnover exceeding 25 million per annum. You know, I mentioned that the government has enacted laws and tax reforms such that small businesses will not have to pay taxes. But this is especially about corporate income tax. So they're saying if you're earning revenues more than 25 million, you will pay tax. However, at that stage, you are still paying a reduced rate of 20% as compared with 30% that larger companies pay. There is also tertiary education tax, which is calculated as 3% of accessible profit. Then value added tax, which is 7.5% of revenues, and that is paid every month. And that is the whole essence of having a VAT file opened at your nearest Federal Inland Revenue Service office, so that you can be filing your monthly VAT returns. Then we also have the capital gains tax. Every time your business disposes of an asset, it could be shares that you bought in another company, it could be an equipment, and it is seen that the company has actually made some profit when we calculate the value of the asset when it was purchased and now that they are selling it. So capital gains tax applies in that instance and is 10%. Then there is the police fund levy, which is 0.005% of net profit. It's how the government has made it mandatory for businesses to contribute to security in Nigeria. So let's talk about corporate income tax, CIT. There's a waiver for businesses earning less than 25 million per annum. You don't pay CIT, although you still have an obligation to file your tax returns. Then when you become a medium-sized company, that's where you earn between 25 million and 100 million, you pay CIT at 20%. And when you truly transform to a large corporate, the time when your annual revenue exceeds 100 million, then you start paying CIT in full. That is 30%. I don't want you to see taxes as a burden or something to run away from. If you are making revenues of more than 100 million in this economy, it means that this country has done something for you to make your business reach that level. We know that it's not easy. It's not as if you got it all on a platter of gold. However, if you are making that level of revenue, you also have an obligation to give back. Many people see giving back as only something they do, a project that they do as an individual or as a company. You are not obligated to do those things. However, you are obligated to pay your taxes. So by the time you pay your full taxes and the government uses it to run the economy, you have given back. So if you see it that way, then you won't have that burden that taxes are not fair or that is too high. You know, I want you to situate it perfectly in perspective so that you don't now start doing things that can be qualified as tax evasion, and that is a jailable offense in every country of the world. Now, I mentioned value added tax, which is charged at 7.5% on qualifying goods and services. Not every goods or service you have to sell or render qualifies for VAT. There are some VAT exempt goods, such as baby items, such as educational materials and food items. You don't pay VAT on those. However, the fact that you don't pay does not mean that you won't file returns. If your products fall in these categories, all you have to do is log into Tax Pro Max and file a zero return after you've shown evidence that your revenues that came in for that period are related to tax exempt items. Other kinds of businesses that are VAT exempt include pharmaceutical businesses and businesses that have to do with medical supplies. On my screen here, I have a schedule of zero rated items which are exempted from paying VAT. You can go through the list. And I also now move to withholding tax. Withholding tax is applicable on specified transactions. So any month in which you have any type of transaction that is similar or that falls into category listed on my screen, things like dividends, interest, and rent, you receive rent, or directors' fees. Some of you, in addition to being CEOs in your company, you are also directors in other company, and then you might get directors' fees, which are usually paid every quarter. Or maybe as you are restructuring your business, you are bringing in directors, and then you are having your quarterly meetings and you have to pay them directors' fees. So you are meant to charge withholding tax, and the rates vary. It ranges from 2.5% to 10%. So you should go through the schedule shown on the screen to see what rates to apply on such transactions. What it simply means is that you will not pay that person in full. The percentage of it which you are meant to remit as taxes is stated. For instance, where it's management fees, you are meant to pay maybe a consultant 10% management fees apart from their other charges. So you take 10% of that amount. If the entire fee is let's say 100,000, so you are supposed to charge 10% as withholding tax, which is 10,000 naira, which means you're only paying 90,000 to that client. You then remit 10,000 naira on their behalf to the government, and you have to ask for their TIN, such that after you've done the remittance, they will also see the record in their own Tax Pro Max profile. So these transactions, what it means is that you will not pay the client in full. The portion which you are to withhold is stated, and then you pay that to the government using that client's tax identification number. Filing monthly returns. VAT is payable every month. So I don't want you to, the essence of this class is so you don't run foul of what the FIRS expects. There's some remittances, you pay them monthly. For VAT, you are given a 3 weeks grace, which means taxes for January now, you have up until 21st of the following month to pay it. There's some taxes where you pay annually and they give you up to a 6-month grace, like your corporate income tax. Like I said, whether you are paying taxes or you're filing a zero return, you still have to ensure that you go in there and file a return, because the penalties are quite steep. And by the time they are calculating you, if you've been accumulating penalties for the past 10 years, you have to pay that 10 years worth of penalty at once. And it usually comes at the time you need that tax clearance certificate to pursue an opportunity. So it's a cost that is avoidable with the right information, and that is the essence of this class. On Tax Pro Max, the system is configured to calculate your taxes automatically, because they are the government. They have access to your account. They know how much comes into your account. So based on the flow of money, they are making an estimate about how much taxes you should pay. Remember in our bookkeeping class where we talked about records, it is only through records that you are able to say, no, this is not revenue, this is something else, it is a loan. Then you have a document to back it up. Do you understand? So if you don't have those documents, the FIRS classifies everything as revenue, and it will have calculated your taxes based on that. But when you have proper financial records and your auditors have used that to prepare audited financial statement for you, which adequately shows which one is revenue, which one is a loan, and what is the accessible profit on which taxes can be based. So your audited financial records are one acceptable documents that the FIRS can use to reduce your taxes. It is not by word of mouth, but when they see that an auditor has gone through those your records, which we discussed in bookkeeping, and they have prepared audited statement for you, then with that you can be able to make a case, no, I'm not supposed to pay this amount of tax, and then it will be acceptable because it's coming from a third party who is your auditor. Now, taxes are a very delicate matter. I mentioned that auditors are very important because what they produce for you could very help you to reduce your tax liability. However, another set of consultants which are indispensable in tax matters are called tax consultants. A tax consultant is able to look at all the legal loopholes available and know where you can qualify for waivers and ensure that you don't get unduly penalized. So you should have a tax consultant in your business. Remember, you are a big business now. You should do things differently than when you were just the lone solo entrepreneur doing everything by yourself. When you get a demand notice in your business, it is not your duty to start negotiating. You may not have all the legal knowledge to do that, and you certainly don't have the experience to do that. When you have a demand notice from the FIRS deposited at your business premises, the next thing for you to do is to contact your tax consultant and let him or her handle it. And what I can assure you is that you're going to get a favorable outcome, but that is the essence of engaging their expert services. Sometimes you receive a demand notice that is totally unjustifiable, and maybe your tax consultant was not able to get a good deal for you at the negotiation table. There's something called tax appeal. There's a tax appeal court where you can take your case to for it to be fairly heard and adjudged. So if you are going to a tax appeal, definitely you will need your auditors, you need your lawyers, and your tax consultant. Is something that the auditors should handle. The point you are trying to make here is, as essential as taxes are, you are not supposed to pay what is not justified by your revenues. As long as your bookkeeping is accurate and you have the records, you have formal procedures by which you can appeal any demand notice or any tax demand notice, any tax judgments made against you. In our live class on Zoom, we'll talk more about this. And as a big business, these are places where you need to rely on the expertise of professionals. So at this point, you will need a tax consultant, you will need your auditors, and you will need your lawyers. See you in class.